Hey, what's going on, guys? It's your boy MC Fire.
Ice Cube.
Hey, guys, we're coming at you with some market analysis. As always, this isn't us telling you what you should do. This is kind of us kind of explaining what we're looking at, how we look at the market, why we're looking at what we're looking at, and just kind of our learning. So we're sharing that with you. We are by no means any guru, and this again is a vlog. So we want to vlog consistently like what we do and how we look at the markets. Okay, so let's dive right in. Get the screen pulled up here. Awesome. We're also gonna have to share the display. Did it work? Oh man,
You never select it.
didn't know it. Technical difficulties here, guys. Awesome. All right, so we'll leave this up for now. So starting out the gate, we want to we'll go to the second one here in two shakes. So starting out the gate, we want to go ahead and start out with like news and see what's coming up for this week and how that affects us, right? So in our news, who is going to be affected with high volatility information? Really, the red stuff is what we want to focus on, but we like to keep everything to see what's going on in the world, and some European markets or Asian markets might affect our market. So it's just something to think about when we're looking through it. So out the gate, Germany has CPI, kind of all day thing for them. Another red item specifically for the U.S. is employment cost index. Not too sure what that entails, but it's a high volatility item because it's red. So it's just something to be thinking about. And at 10 a.m., there is consumer confidence and employee change for the, I believe those are the Aussie boys, right? The boys down under. So it's either New Zealand or Australia, one of the two. I can't remember. But long story short, what we have is consumer confidence and unemployment costs, right? For coming up on that is Tuesday, April 30th. And then going on Wednesday is going to be the big ticket. Part of non-farm coming up, and then FOMC statements, Fed funds rates, FOMC statements, and what's going to happen with our Fed funds rate. The big news now is the Fed fund rate going to increase? Is it going to stay the same? We really just don't know.
Nope. Device capture.
Oh, device capture.
Slide that down there.
Cool. So now you guys can see us. Awesome sauce. Sorry about that, guys. So also on Friday for the U.S., non-farm employee change. So what all this really means is if we go to, let's see, our favorites. I'm gonna try to pull this up for you. CME. Let's search CME. CME Fed Watch tool. CME Fed Watch. There it is. Boom. Cannons. We're gonna pull up the CME Fed Watch tool here and see kind of what the interest rate will and should be moving forward. Let's see. Yep, as it comes up, took a sweet time. So what they're really saying is what they think it would be going into current target, and its rate is going to be almost 97% locked in at 5.25 to 5.5. That's going to be your interest rate. Okay. What we really want to know is it projected to in this May 1st meeting go down or up next quarter? So again, 88% of analysts are saying it's going to remain at 5.25 to 5.5, and then the next meeting, there's it kind of skews to the left at them potentially dropping it, but overwhelmingly, the rate would be 5.25 to 5.5, and that's kind of what the market's already, we could say, kind of priced in. And if you don't know, the CME Fed Watch tool is, again, free. You can go check out to see what the Fed fund rate is estimated to be. It's pretty accurate to what analysts are saying will be the new Fed funds rate. Okay. So for sector rotation in particular, right, we want to look at, well, how does the market, seeing that what sectors are going to be affected as the news drops, this is probably the single best indicator for us to see all the sectors outright and see if there's any sector rotation as it regards to that. But the market's taking it very well, except for whatever dark blue is, utilities. So the sector utilities, not catching a lot of wind in its sails, but the tech sector is loving it. And then communication services is also loving it, as well as financials is having a field day too, right? A little dip there in financials, and then consumer discretionary. So if you're in any of those sectors, holding might be the best thing. Again, this is, I'm not telling you can hold or not hold, but we want to stay on the pulse on what sectors are going to be doing and how the overall market is going to be affected. So XLF is looking up, took a little bit of a dip, but consumer discretionary, as well as XLC and XLK, and for the ETFs. Okay, so if we take a look at over at our charts here,
Did you turn these down?
turn which ones? Like the screen?
Mm-hmm.
No, I didn't turn the screen down.
Mm.
About the, what do you think we should show them the charts now?
Are you done?
Yeah, I'm done. I guess I'm done with the information aspect.
Mm-hmm.
You got any questions?
No.
Okay. So right here we got pulled up for you guys is the screen for really for what's going on in the market. Remember we said XLK, so we'll pull that up. After hours trading, it did kind of test the highs, and that's good, right? That's good. We like to see the market push to new highs. That means demand is still good, even though interest rates are high. People are willing to take a buy on the market, right? Also, communication services kind of slump down a little bit post market, but that's not to say that it won't bounce back and follow the Qs and the SPY, which both of which are actually pushing up, and we're pushing up post market. So nice. Remember we talked about in the last sector rotation, right? Things can rotate high to low, low to high kind of things, testing and retesting value areas and support and resistance levels. As it tested fair value, came back up, retested support level. Right now, if it retests and it breaks, then what do you think it's going to do? Go to fair value, kind of in the middle there, right? Went to fair value, had no problem maintaining fair value, little dip, and it started a rally. That rally, I'm assuming, is going to test the high because there's no major, it's not making lower lows and lower highs. It's actually making the opposite, higher highs and higher lows. Because of that, I'm assuming that it would go on in the market and test this resistance level. That's the ES, and then the NASDAQ, kind of the same thing here. Let's actually go to the NASDAQ itself. Yep. So breaking, testing this resistance level in the market, kind of maintaining at the top of the range. Took the little dip like we saw in SPY, broke through, and now we're seeing it has the potential to go here in fair value where SPY was in resistance. So we could see some potential as it tries to test fair value. If the NASDAQ goes up, then the SPY, by its nature, being heavily weighted, will also continue to rise. And we can kind of prove the weighting for the SPY if we go to ETFDB here. ETFDB. We're going to pull that up for you guys. Here we go. And then if we go straight for the SPY, SPY, boom, we see holdings. And as you can see right here, the main holdings in the SPY, like the big hitters, are Microsoft, Apple, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, and Eli, right? Most of these at the top, they're in the SPY or in the Qs, excuse me. So if the Qs continue to rise, we could say that they could potentially drag the SPY up with it, right? Microsoft, Apple, Nvidia, Amazon, Meta, Google, the names are kind of matching. And if you ever wondered why the SPY and the Qs kind of move in tandem, is because a lot of them are weighted with the same big hitters. So if like the big three, right? Microsoft, Apple, Nvidia, Amazon, and Google, right? And you throw Meta in there, if they all do good, then the market overall can do pretty good, right? And that's kind of the idea. So what do you think, Q? You got any questions? Does that make sense?
Mm-hmm.
Okay. Cool. So we're going to go back to the other screen and look at some more stuff. So which one do you want to do first? Do you want to go over potential squeezes, squeeze plays in the market, or do you want to look at some hot picks?
Squeeze.
We'll go to the squeezes. Okay, I like that. So we'll close this, open this, and we'll pick out first. We'll do the weekly squeezes here. Okay. So out the gate, there is the British pound, right? And again, this is off a weekly chart, so we'll take it on the weekly. You've got a weekly squeeze. It's been kind of squeezing for 7 weeks, which makes sense. It's kind of staying within this range. So how does a squeeze work? If the Keltner channel or the Bollinger Bands is inside the Keltner channel, which means there's low volatility, and that's just the way to track it. The Bollinger Bands kind of show volatility. The Keltner channel kind of shows what volatility is like at a normal range. So Keltner channel's normal range of volatility, Bollinger Bands is moving volatility. If moving volatility is inside normal volatility, you get a squeeze. And it's been that way for 7 weeks. We have this up here just so we can kind of see how many, we don't have to see the squeeze down here. We can just have it right here and know that there's a squeeze in play. And also, you know Shopify, right? Nice. We're about to pull that puppy up. So there is a squeeze for Shopify, but I'm not sure if you guys can see it now. But Shopify, if it's going to squeeze right here for the past, let's say it's saying 5 weeks, 1, 2, 3, 4, 5. Technically, the squeeze is back here, and I believe it's already kind of fired. Like when I look at it and say, if you started to squeeze in this area, once you broke this resistance level, and last week or 2 weeks ago you rotated full rotation down, this squeeze is pretty much broken, right? So it just kind of gives you a heads up, but it's not perfect. No indicator is, and if it was gonna break, then it probably, there's not a lot here, right? I'm expecting it to test maybe fair value. So we could say it's here. If it tests fair value here, we want to know. And even worse, if it tests fair value here, we want to know, right? Nice heads up there for the squeeze. Moving on to the day squeezes, we have NVO. So this is very, very nice, right? Actually kicked off a nice, juicy weekly buy trigger, and it's in squeeze. So with it being a 3-day squeeze, this is kind of what you want to see. A 3-day squeeze kicking off a weekly buy trigger would absolutely be amazing for anybody in NVO. Okay. Tight little pullback here, but if it starts to continue to push, this pullback is extremely healthy, especially for the boys who like Fibonacci's. Not a big fan of Fibonacci's, but if it's pulling back within the upper third, for those who are fans of Oliver Velez, this is kind of what you want to see. Nice, healthy 1/3 pullback within a upward trajectory. It's good for you. So, what do you think? Does that make sense? Yeah, bottom, left, top, right. Pretty straightforward. Mm-hmm. You got any questions on it?
Why are we looking at squeezes if we do the asymmetrical trading?
Very good. That's a great question. So, Q is like why would we look at squeezes If, right, we do something that gives us a high risk to reward ratio, right? Great question. So let's say, for example, you have a buy and hold, like you have the Q's buy and hold, or Meta, or Shopify, right? There is, let's say, for other people that might not know how to do asymmetrical trading or haven't proved it, this is a good way for them to know the other opportunities there are in the market. So NVO, they're the ones who do like weight loss, and they've been in a complete boom market ever since then. But maybe they didn't want to get in when it's like up here or up here. So giving them heads up, this could be a potentially good part to buy, right? You have a resistance level here. It's above the 8 peer moving average and broke previous week's high. After a 1, 2, 3, 4, 5, 6 week downtrend, finally a break of high is good. A catalyst to that buy is a 3-day squeeze. So meaning if something's been in a squeeze for like 3 days, it's probably calculating 1, 2, and 3, this being the range, in that 3-day squeeze. It could be a very potential juicy play for someone else. Okay. And then let's say you wanted to put you can even do asymmetrical trading on here. Probably the best way to do it though is if you're looking at like days to expiration, it'd be a end of the week expiration. So you could say, well, I still want to do asymmetrical trading. I just want to see where it turns out at the end of the week to get my profit tent, where I think it'll be at the end of the week due to historical volatility. So this is where the support resistance levels can come in handy, right? We could put level here and say, okay, in a week, like what our mentors taught us, right? If we have, here, right? You've got a buy trigger here. So let's say, for example, where do I think it's going to be in 3 days? We'll put a play on for 5 days and say, okay, fair value is where I want to kind of lay my net to catch this fish. Or if I really think it's going to be volatile, put it up here. So you could still run asymmetrical trading. It just wouldn't be for like every day, kind of like on the ES or the Qs. It would be, I would trade it at expiration. And where do I think it'll be for expiration? At expiration. Okay, so you could still lay a butterfly up here and catch a nice windfall on something that you believe will really move. That's also a really good question too, because the squeeze is really for volatility. So when things are low volatility, the next stage is high volatility, right? And for a butterfly to be profitable, you really want it to be in a high volatility environment so you can get those big outsized moves and hopefully get pinned, right? So periods from low volatility transitioning to high volatility are excellent trades for an asymmetrical system, okay? Nice. Also another hot ticker on here, same thing, COP, which is ConocoPhillips Oil Company. Looking for on the weekly, don't have really a buy trigger, but if you wanted to take a 3-week options trade on the daily, I wouldn't have a problem with that. Remember, it has to be above the 8 peer moving average and above previous day's high. It's not either. So to actually be a buy, we would need to see a cross above both the 8 peer moving average and the previous day's high. It's not currently above either one, so we hold off. And really, if you want to be safe, you could say, hey, I want you to move 1.01% above previous week's high. So you probably can kick it up here and it'd be a-okay, right? Say, hey, I want you to push a little bit so I can be sure that sellers have gotten out of the way, buyers are in control, right? Another one, oil, very similar play. I would be looking for this to the upside based off the weekly chart. But again, we're looking for that buy trigger. You need to be above the 8, be above previous week's high. Right now, it's actually giving you a sell trigger. It's below the 8 peer moving average and below previous days low. So that's a no-go for us, especially if you, now maybe you want to trade this to the downside, you could do that. And then the lowest we go is the 15-minute squeeze. This is more for your day traders. So if we pull up like Amazon here, Amazon's looking like a whole snack, right? This is a good way to see, okay, you're at the top of the range, you got a tight squeeze here, and if we were in, it would, if we were able to trade, after hours, we would definitely look for it to trade at least to fair value, right? So break high, break this range, and trade up into fair value, up into this area. That's definitely my guess. AMD, same thing, same almost same chart pattern, trade up into fair value. Meta, tight squeeze, not really testing highs. So I would be a little hesitant to take Meta in a day trading aspect. And then of course you got Shopify, same thing. It's a little bit more flat, right? And we actually have Boeing. We like Boeing, right? It's weird. We have a weird relationship with Boeing, right? But it's kind of the same thing here. Now, what I see different is this is a wide range for fair value. Probably need to update this because there is another right here, right? Kind of came down, tested this level, and retested. So we could actually put that there, and then we'll put this here as well. Boom, boom, right? As a level that it tested and all that good stuff. So very quickly updated our chart. Nice. Take a look here. And then there you go. So it's testing this level here, and then the next area of value is probably in here. The next tested level is up here. So if it doesn't break, fair value down here. These are good places to place your asymmetrical trades. If you're going to take a trade like this, again, it is expiring at the end of the week. Not too expensive, but for a butterfly, if you're going to do a call butterfly at the end of the week, let's say 4 deep, just so you're tracking, right? If we go buy, deep and wide, let's just do 4 strike wide, butterfly. What is it going to cost you? It's only going to cost you for a week $1.25 on the limit. Now, if we go to analyze trade here, the outside return, you could lose, let's say, $125, right? Maximum loss here. Oh, I have some other ones selected. Sorry, guys. Yeah. So maximum loss here is like 125, but potential gains could be 400 or excuse me 870. So if you got pinned at expiration and it made it up to the center strike of 179, right? You could get an outsized return of 870. It's still the same play, different instrument. Doesn't have all the advantages in your favor, right? You can't do this like every day, but 179, you'd have to basically get up to test up here. So if you believe Boeing, where we go to here, if you believe that Boeing after the break would test its high again, right, like it did this day, right here. If you say you're like, hey, I think Boeing's gonna test its high, this outsized return would have netted you very, very, very nice in the spread. You might not have got the full. Because it's not an expiration. But if you can risk $100, and even if it gets in the profit tent in the middle at the time, right, you're looking at $460. That's really, really good. So if you can risk $100 and make $400, right, you're talking about 300, or excuse me, like 400% return on investment. That is wild, right? 300% return on investment, excuse me. So if you get a 300% return on investment, that's what we're looking for. Now, you can wait to get a, 700, 800% return on investment. But if you're not willing to take like 4 to 1, like, I don't know. I think it's pretty good. So it just puts the submit risk to reward in your favor. Does that make sense?
So what's the blue one?
The blue.
The blue line? Because this one has a different number than the other line.
Very good. Good question. So the blue line and the cyan line are what the price is going to be. The blue line is what's the price of your option going to be at expiration. So if you notice, it gets tighter as you get to expiration. The blue line is at expiration, right? These red lines basically tell you above here, you go into profitability, right? You go into profitability at expiration. This line is included for time value, right? So because of the potential, it moving in volatility, you can actually get paid here, right, at 17 or 167, right? If we entered it right now and price moved up to here, you will have made $75 and it's not even in the profit tent. Or you could make as high as 121. That's why these things are so powerful, because if you look down here, right, at expiration, you would be negative. How much? The cyan color is expiration, so how much would you be negative?
37.
Very good. But if you sold it right here, how much would you sell it for?
129.
Very good. So that means that this is still, you can almost still get 100% return on investment and it not even be in the profit tent. So if it's getting really close and you're like, I could take my 100% return and run, or I can see if it just edges out over here to get like a few more bucks, then cool. But as it gets, if it stays right there at expiration, you lose money because of gamma risk. Okay.
Well, would you want to pull it early, or did you want to wait to see?
Even
Like,
better.
why would you, if you're only risking a little bit?
You would want to. You would want. It depends on the time frame, right? So if, let's say, you're in the morning aspects of today, and it gets to this point, I wouldn't want to pull it, right? If you're in the afternoon, I would. It'd be kind of a 50-50. If I'm up 100% and it's in the afternoon, I'm looking to put a stop loss of 60%, right? If it runs down this much, okay, I'll take my profit, I'll get out, we'll fight again another day. But if I have a stop loss of 60%, it gives it enough wiggle room to go against me and then maybe go into the 10. So at minimum, you're covering your risk and you're saying, I'm not leaving with just literally nothing. I've taken off the risk of my trade, right?
Yep.
And I've kept room for it to go wildly in my favor. So using the right tools for the right job at the right time. Time is going to determine when you use that tool, right? Now, let's say it's like the last hour, last 2 hours, and it's up here or whatever, right? Then, yeah, I'm probably going to pull it. I'm going to put a 20% stop loss. You either run or I cut you. It makes sense? Yeah, so we wanna keep those profits. Great question though. Really, really good question. Very good. And so that's for Boeing. So that's all the squeezes we've got, guys. Those are really the major plays that we see. It's all red Sunday from here. Like you see, MACD crosses aren't looking too good. It's below also this value area, looking to test lows here. It's not looking too good. Boeing's been in a lot of trouble lately, and this is on a daily chart. So if we look on the weeklies, same story, guys. It's not looking too pretty for the big plane builder. So we'll see if it can recover. We were actually looking for Boeing for sale like back here. Didn't really follow through on it, but you know, our analysis was actually correct. So shout out to us and being able to, you know, at least kind of use what we've learned from the mentor and predict direction. Which leads me to the next thing, and last and final thing, talking about predicting directions, right? We're gonna let you guys in on one of our favorite secret weapons. We're gonna bring up Vantage Point here, and for us, this is really cool. It is a little bit of a pricier tool, but what it allowed us to do is kind of use a program that was built using what? AI, right? Yeah, so we use this almost every day to kind of get a gauge on the predictive model. What we have up here and to kind of showcase it is the high and low is what the algorithm for it predicts, kind of its high and low, and it's kind of 80. Like if you notice the line that corresponds to the price, so it's somewhat accurate. You see some here, just some volatility, but was saying neutral or up. So getting the direction right was like half the battle. Same thing here. It was saying that like this was gonna be up, but it was down. So it's not perfect, but it is pretty accurate. It got all of these days pretty high and low accurate, high and low accurate, high and low accurate. This candle is generated now for a potential play into Monday. So what Vantage Point is basically saying is that the S&P 500 probably won't break yesterday's high. These are daily candles. Probably won't break yesterday's high. Okay. And I really like this tool because it kind of gives you, especially for asymmetrics, if you can day trade SPY at 0 DTE, this is a really good way to kind of be confident in your decision, right? Because it's 50-50. So, yeah. Any questions about that? That's you played around with that a little bit, so heck yeah. Well, guys, thank you guys for joining us. If you guys have any questions in the comments, please, man, blast us on whether it's Vantage Point or whether it's.
They can't message us on Vantage Point.
Oh yeah. Oh, they can't. Oh, if they had questions about it.
Oh, if they have questions, I'm like, this isn't a messaging tool.
Yeah, no, like I got what you're saying. Nah, they can message us about it, right? If you guys have questions about the tool, feel free to hit us up. And like you said, don't try to hit us up on Vantage Point; it won't work. Hit us up in the comments below, or watch some of our previous videos on like motivation. We had a couple we interviewed each other for you guys, like an interview format. I thought that was really cool. But yeah, if you guys have any questions about the charts, Vantage Point, like how to set any of the stuff up, if you want us to go back over the high, low, like how to set support and resistance levels, yo, let us know, man. We got you guys. We love doing this stuff, and we love chatting with whoever wants to walk with us on this journey. You want to talk with them a little bit about the high ticket e-commerce a little bit?
Not really. We're just looking at suppliers and stuff, so I don't want to get anybody too excited. So once we start getting stuff, then like I never like talking about things until things are in motion, and I don't know, I just don't like doing it.
Cool. So we won't drop those nuggets on you guys, but we will definitely as it actually gets completed, we're gonna showcase like all the hard work we've been doing and lay it out there. So this is your boy MC Fire
and Ice Cube.
Thank you guys, and appreciate you joining us. You have a good day, and goodbye.